What's going on, everyone? Welcome back to the channel. Today, I want to zoom out all the way out and talk about more of the macro picture of crypto because if you don't understand the macro, you're basically trading blind. Too many people get caught up in a 5-minute chart, chasing narratives, chasing pumps, but crypto doesn't move in a vacuum. It never has. And right now, the macro forces shaping this market are more important than any single altcoin, any meme, or any short term trend. So let's break this down clearly. First things first, crypto is no longer a fringe asset. The era is over. Crypto has officially graduated into a global market asset. Bitcoin trades like a hybrid between digital gold, tech stock, and a global liquidity barometer. Ethereum trades like a programmable infrastructure. And altcoins, they are leveraged bets on growth, innovation, and speculation, which means they live and die by the macro conditions. So let's talk about the bigger driving asset, crypto, at a macro level. Let's talk about liquidity. Crypto doesn't move because of vibes. Crypto moves when liquidity enters the system. When money is cheap, when credit is flowing, when risk appetite is high, crypto explodes. When money tightens, when rates rise, when fear hits, crypto bleeds. And for the last couple of years, we've been living in a world defined by tight monetary conditions, high interest rates, quantitative tightening, central banks fighting inflation. That environment is not friendly to speculative assets. But here's the shift, and it's critical. We are now in a transition phase. Inflation is cooling compared to its peak. Central banks are no longer aggressively hiking. Markets are forward looking and they're starting to price in a future where rates eventually come down. Crypto doesn't wait for rate cuts, crypto runs before them. That's why we've seen Bitcoin holding strength even during uncertainty. That's why capital keeps rotating back into Ethereum, Solana, and selective altcoins. Smart money positions early. Retail always arrives late. Now let's talk about Bitcoin specifically, because Bitcoin is the macro anchor of this entire fucking market. Bitcoin has become a sovereignty grade asset. Institutions aren't buying Bitcoin because it's cool. They're buying it because it's a scarce, borderless, neutral, and it's liquid. In a world where debt keeps rising, where currencies keep getting debased, where trust in institutions keeps eroding, Bitcoin becomes a hedge against systematic risk. And here's the key point most people miss. Bitcoin doesn't need the system to collapse to win. It just needs the system to continually exactly as it is. Now, zooming out to Ethereum and smart contract platforms. Ethereum is no longer just a crypto project. It's becoming a financial infrastructure. Stablecoins settle trillions of dollars on chain. Institutions experiment with tokenized assets, real world assets, payments, AI agents, and financial rails are moving on chain. That's not hype. That's fucking adoption. At the macro level, blockchains are competing with legacy financial plumbing. And legacy systems are slow, expensive, and fragmented. Crypto is way faster, cheaper, global, and programmable. This isn't a short term trade, it's a multi decade transition. Now let's talk about altcoins, because this is where macro understanding really matters. Altcoins are risk on assets, they thrive when confidence is high and liquidity is abundant. This means altcoin seasons don't happen randomly. And that's what we're seeing right now. People are freaking out because altcoins aren't running, but patience is key. They happen when Bitcoin stabilizes, Ethereum confirms strength, liquidity expands, risk appetite returns. That's when narratives explode. AI, layer twos, real world assets, DePIN, gaming, SocialFi. Narratives are not the cause. They are the expression of macro conditions. If liquidity dries up, narratives die. If liquidity flows, narrative flies. This is why patience is a superpower in crypto. Now let's talk about regulation and geopolitics, because macro isn't just charts and rates. Governments are no longer asking if crypto will exist, which is very smart. They're asking how they can control it. And that's actually bullish. Clear regulation invites capital. Uncertainty keeps capital sidelined. The more crypto integrates with traditional finance, ETFs, custody solutions, tokenization, the more capital can flow in a scale. At the same time, geopolitics tension strengthens crypto's value proposition. Capital controls, sanctions, banks, instability, currency debasement, all of these push people towards permissionless systems. Crypto thrives where trust is weakest. Now, here's the uncomfortable truth, and I want you to really hear this. We're still early, but early doesn't mean easy. The days of buying anything and getting rich are gone. They're fucking over. This is now a selective market. Strong fundamentals win, real revenue wins, active ecosystems win, hype without substance fades. Macro conditions will lift the tide, but only the strongest ships survive. So what does this mean going forward? It means crypto is positioning itself for the next liquidity expansion cycle. It means volatility is the price of admission. It means conviction beats emotion. If you understand macro, you stop panicking on red days. If you stop chasing green candles, you start thinking in cycles, not weeks. This market rewards patience, research, and discipline, not noise. And the biggest mistake you can make right now is underestimating what's being built, simply because price hasn't caught up. Crypto doesn't move linearly. It compresses. It frustrates. Then it expands violently. That's the macro rhythm. So zoom out, think bigger, position yourself smarter, because the next phase of crypto won't be driven by hype alone. It'll be driven by a global money, global markets, and global adoption. And that's where things really get interesting. If you got value from this breakdown, make sure to like, subscribe, share this with everyone on the macro level. You know, anyone staring at the 5-minute charts, wondering why the market feels like shit. It's not random, it's macro, and it's the major shift we've been looking for. So hold strong, hold tight, and buy the dip, baby. Not financial advice.